But let's talk about financial planning. Sitting here with us is Harrison Johnson. He is a certified financial planner. Today, talking about financial planning, the real cost of employer coverage versus Medicare. What are you talking about here?
So I had a conversation earlier this week, and it kind of inspired this. When you get to 65, that's when you're eligible for Medicare. But sometimes you have the ability to stay on your own plan through your employer, or if your spouse is still working and they have health insurance, you can potentially go on to their plan. So, at 65, you have this decision. Do you go ahead and enter the Medicare space, or do you stay with an employer plan until your spouse retires or until you retire? And the difference here, there's a lot of differences, but the difference I want to point out is from a tax perspective, these are two very different things. When you go on to Medicare, no matter who you are, you have a Part B premium that you have to pay, and then that can be higher based on your income because of IRMA. And then if you have an Advantage plan or a Medigap plan, there's these different premiums that you have, or you might have a Part D premium. So there's Medicare premiums, and they're considered medical expenses, which potentially are deductible, but it's an itemized medical expense deduction. So you have to itemize, which a lot of people don't because of the SALT cap being removed. More people are going to be able to itemize. But the other thing is medical expenses as an itemized deduction, you can only write off or deduct the medical expenses that exceed 7.5% of your adjusted gross income, which is a very large threshold to get over. So if you have an AGI of $100,000, the first $7,500 of medical expenses are essentially not deductible. And only the excess then is an actual itemized deduction. And then, all of your itemized deductions have to be greater than the standard deduction to be able to get any benefit at all. So the takeaway there is for most people, Medicare premiums are not deductible, or they don't, actually help your tax situation at all. When you have health insurance premiums that you pay through an employer, it's generally part of what's called a Section 125 cafeteria plan, which means those premiums are pre-tax. In California, if you're an employee, most employees have 5 different income taxes that they are paying. There's federal, state, Social Security, Medicare, and disability taxes. And health insurance premiums are pre-tax on all 5 of those taxes. That's different than a 401k, for example, that is only pre-federal and state taxed. You're still subject to payroll taxes, but health insurance, it's pre all 5 of those taxes. So if you're in the 22% tax bracket, you essentially receive an over 40% discount on any health insurance premiums that you're paying through your employer. So when you're looking at, going on to Medicare versus comparing those health insurance options, obviously the coverage is a little bit different, but when you're making that decision, you need to weigh what the after-tax cost of those 2 different options are to really see, what the best option for you is going to be.
And, this does surprise me. I thought whenever you hit 65, you had to go on Medicare, but you're saying that's not the case. There's ways around that.
There's ways around it. And I mean, sometimes Medicare is the right thing to do, right? Yeah. So when you turn 65, if you're still working, generally you'll get Part A. Part A doesn't have a premium to it, so you jump on that when you're 65. But if you're covered by a qualified plan, which a plan through your employer, whether it's yours or your spouse's, if you're on that plan, you don't have to go on to Medicare. So let's say you're 65, you start Part A, you're still working though, and then you retire at 67. At that point, you would go on to Medicare, or you'd go on to a spousal plan. So you have a choice of, do you want to go on to the full Medicare and add Part B and the supplement plans and the Advantage plans, or can you get the coverage that you need potentially at a lower cost while staying with your employer or going on to a spouse's plan?
And I don't think anybody's ever talked about this before. I mean, I'm sure somebody probably has, but it's just like, I doubt very seriously 99% of financial planners would bring this up, because it's way out in left field, but it could be a big thing because you talk about the taxes. There's so many benefits to it. I mean, these are things you think about that people like, I never thought of that.
And this kind of came up in a weird way. I was meeting with some people this week, and we were talking about other things, and husband and wife, wife was retiring, and the husband was like, oh yeah, she's just going to go on to Medicare because if she goes on my plan, it's really expensive. And I'm like, well, what's really expensive? And it turns out after tax, it's actually cheaper to go on that. So it wasn't a question. It was just kind of something that they had brought up. And then, we looked at it, and that's actually going to be a more comprehensive and cheaper overall plan for them to go on.
And sometimes employers will subsidize some of the cost. If you don't use that benefit of their health insurance they're offering, they don't give you money back, right? If you go on Medicare.
Sometimes I do, but generally in the case of like a spouse, definitely not. So like in this case, the husband, who was still going to continue working, his insurance was completely paid for by his company. If he added a dependent like his spouse, then it was going to be a little bit more money. But looking at their tax bracket, the net cost of that, especially because they would have triggered IRMA and there would have been a higher Part B premium. And in 2026, Medicare Part B premiums are going up anyway. Having her on his plan turned out to be quite a bit cheaper.
So many things in financial planning that people just don't think about, and they miss out on some big benefits, some big tax advantages just by talking with you, because you look at many different factors like, wait a minute, maybe we should look at this.
Yeah. And I mean, some things are really big. In this particular case, it translates to, I don't know, a couple $100 a month or maybe a few $1,000s a year. So it's not breaking the bank, but you might make the wrong decision and then just never know about it. Yeah. So if you can just make the right decision here, the right decision there, the right decision here, it adds up, and it just makes life a whole lot easier if you don't have to worry as much about, finances, and you're all taken care of.
A little bit adds up to a lot of bit, especially over years.
Absolutely.
Yeah. Well, Harrison, great information. Thanks very much. We'll talk with you soon.
Thanks, guys.
All right. Again, as Harrison Johnson, he is our financial planner, CFP at Wilsey Asset Management. If you'd like a free consultation to find out maybe you have things that you're not taking advantage of, he can talk to you about that. Give him a call at the office, 858-224-0004. Again, that's 858-224-0004. Or go to the website, smartinvesting2000.com. Again, that's smartinvesting2000.com. You can send him an email, say, hey, I'd like to sit down with you, have a free consultation, and he'll do that with you. So that was a great topic.
That was a good one. Yeah, something that I think, as you said, a lot of people don't think about.